The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to this Monday edition of Scorebox. I hope you all had a very restful weekend. I'm Steve Sedgwick with Karen Cho, and these are your headlines. A major policy shift. The US President Joe Biden reportedly giving the green light for Ukraine to use US-supplied long-range missiles to strike Russia. US stocks actually see their worst day in 2 weeks as the Trump trade peters out. But Europe is so far lagging Wall Street by a record margin this year.
Trump chooses two more of his top team, picking big tech critic Brendan Carr to lead the FCC and naming oil and gas executive Chris Wright as his choice for Energy Secretary. This is the outgoing US Energy Secretary Jennifer Granholm claims it would be political malpractice if Trump unwinds President Biden's green projects, telling CNBC his victory does not mean America has turned its back on the climate transition.
Just because there's a change in leadership at the White House does not mean that the United States is not all in on this energy transition. And when I say that, I'm talking about the states, the cities, the non-governmental organizations, and business.
Very good morning to you. How was your weekend?
It was busy. How about you?
Yeah, busy. I'm glad to come back to work just for a bit of more peace and calm. But look, there is so much going on in the world at the moment. We'll talk about markets, but it's this weird interregnum period that we get every 4 years where we've had the end of one regime day pretty much, and we're waiting for the start of the next regime, and the markets and everyone's thinking about what to do in the meantime as well. So we've got a very strange couple of months, I think, ahead for markets, for politics, for economics.
There's a lot of news flow, though. I mean, we're getting a ton of different announcements around appointees that Trump sees as potential, heads of various different industries and various different sectors. I think there are big ramifications coming. Just the market's trying to work out what they are, in particular, and how to trade them at a sector level.
Yeah, you're right. The market's taking no prisoners. Producer David and us, we're talking about the healthcare sector, for instance, under a large amount of pressure since the appointment of the health secretary or the potential health secretary, depending on ratification.
Stolen some of the thunder from the Wegovy's and the Ozempics, that trade that's been on the weight loss drugs, very evident in big pharma stocks lately.
Yeah, although they were probably bruising for a bit of a downtick, weren't they? They were trading at such elevated levels, as indeed is Nvidia, which we've been looking at previews of, and we'll do that throughout the week as well. So, the current president, though, has now authorized Ukraine to use long-range missiles supplied by the US to strike inside Russia. Now, this marks a significant shift in White House policy, according to several reports, including NBC News sources. It comes in response to the deployment of North Korean ground troops in Russia's Kursk region, and after waves of fresh attacks on Ukraine over the weekend. The White House has not confirmed the reports, but Ukraine's President Zelensky referenced the shift in his nightly address.
The plan to strengthen Ukraine is a victory plan that I presented to our partners. One of the main points is long range for our army. Today, much is being said in the media about us receiving permission for the relevant actions. But strikes are not made with words. Such things are not announced. The missiles will speak for themselves. Glory to Ukraine.
I think the first thing that a lot of us and a lot of the editorial comments are saying was, well, why now? Why leave it so late when you are, as I say, the outgoing president of the United States as well? Why didn't you give Ukraine the opportunity to do this earlier, potentially? And the North Korean troops thing, does that really change the needle on why they won't be striking, having these longer range missiles going into Russia to strike North Korean troops? They will be going to strike defences. They'll be there to strike the offensive capabilities of Russia that are going into Ukraine at source as well. So I think the North Korea story is important, but it's a bit of a red herring of why Biden has now given permission to the Ukrainians, potentially. Again.
Is it just me, or is there an obvious why, which is that there's an incoming Trump administration, and we know he has threatened to solve the situation very quickly? I think those who've been watching, I think solving any conflict very quickly means giving up large parts of what people already have secured at this stage. So is there a rush for Ukraine to secure more of the territory that Russia has moved in on. So if there is a negotiation, Ukraine is in a better position to negotiate.
I think that's a very valid point, yeah. But again, if you thought that there was a high chance, and I say a high chance, a 50-50 of your administration being replaced by a Trump administration, why leave it so... I mean, your point is correct, obviously.
Yeah, obviously, I think they thought they were going to win, didn't they? So here we are. Let's talk about the US President Joe Biden and Chinese President Xi Jinping, who have held their final meeting in Peru ahead of Donald Trump's return to the White House. The Chinese leader called for the two countries to find ways to get along well with each other, adding that any containment of China is unwise, undesirable, and will not succeed. Biden called for continued talk, saying they prevent miscalculations. The Chinese leader outlined his key objectives months ahead of Donald Trump returning as president.
China's goal of a stable, healthy and sustainable China-US relationship remains unchanged. China's commitment to mutual respect, peaceful coexistence and win-win cooperation as principles for handling China-US relations remains unchanged. China's position of resolutely safeguarding China's sovereignty, security and development interests remains unchanged. And China's desire to carry forward the traditional friendship between the Chinese and American peoples remains unchanged.
Goldman Sachs head of global investment research, Jan Hatzius, has told CNBC how he expects the president-elect to handle the relationship with Beijing.
Our base case is that we'll get China tariffs probably quite soon after January 20th. And, that's going to have some impact, but it's modest. And there are positives to offset it. Fiscal policy is going to be a little bit more expansionary, and regulatory changes, also growth supportive. So we basically stick with the view that we had going into this election, which is that the economy is going to continue to perform strongly, outperform other advanced economies, and outperform the consensus for the third year in a row.
Yes, Jan, but what does it mean for rates? And your perhaps overly optimistic view of more cuts of the last year, are you going to be right next year? That's what I'm asking Goldman's and everyone else. US retail sales, meanwhile, came in slightly above expectations for the month of October, underscoring the US economy's continued strength. Sales rose 0.4% last month. Again, another lack of catalyst for aggressive rate cutting, while September's print was revised upwards to 0.8%. The American population are spending not like it's going out of fashion, but in very hearty fashion. The strong data will add, again, to my point, to doubts over a December rate cut from the Fed, after Chair Jerome Powell suggested last week the central bank is in no hurry to keep cutting rates. We'll get plenty more insight into the state of the US consumer. Walmart and Lowe's are reporting on Tuesday. And that's Tuesday rather than Tuesday. And Target on Wednesday. Meanwhile, the Chicago Fed President Austin Goolsbee says he sees rates coming down a lot. Well, thank you for that, sir. A lot. What does that mean? Over the next 12 to 18 months, so long as inflation continues to trend down towards the Fed's 2% target. Speaking to CNBC on Friday, Goolsbee said the Fed is navigating through a diverse range of data.
Inflation has come way down from its peaks. The job market cooled to something like about full employment where we want it. We did get 1 month of weak jobs numbers that it's hard to reconcile what does it mean for the long run, because we had a bunch of hurricanes, we had a big strike from Boeing. Previous to that, we had a couple of very strong numbers, and previous to that, we had one weak number. So again, we got to take the through line. And I think the through line, as long as we keep making progress toward the 2% inflation goal, over the next 12 to 18 months, rates will be a lot lower than where they are now.
A look at those US markets Friday session in retreat, and you can see in particular on the Nasdaq falling about 2.25%, Nvidia dragging the market back in terms of some of the big moving pieces of the pie. Nvidia stock, don't forget, climbing towards some of the highs we've seen recently, up close to 200% for the year, but just cooling off in that Friday trade as investors again repositioned ahead of the earnings release this week. It's a big one. How's Blackwell, its main chip, performing, and what does it see into the final stretch of this year? So investors just playing it somewhat cautious, and that did have an impact on the semiconductor ETF, but also on the broader market. As you can see, other big trades, as we saw a reversal down more than 1% on the S&P 500 and the Dow. The reversals at a sector level, technology clearly to the downside in that session Friday. Utilities, safer harbour, was one of the better performers for the trading session, but over the course of the week it was a reversal in healthcare that we witnessed. A big fall there, about 5.7% for the trading week. Other big trades, Nvidia itself. Let's just take a close-up look. This is the stock trade for the day, down 3.25%. But that performance I was mentioning, close to 200% for the year. So it's been a stunning old trade. Will the earnings this week be a catalyst to the upside or the downside, I think, is the question for Nvidia, but also for its rivals. They've been looking to try and encroach on that space in semiconductors, but having no real success at touching the side so far. Let's take a look at the US market since Trump was elected. It has been very much a firm trade for US stocks at the expense of European ones, the widest record on margin between the US and European markets. And you can see how the trade has been for the Dow, the S&P and the NASDAQ. Dow clearly perched ahead there as well. A look at treasuries. We did mark higher on those yields. The 10-year last week, 4.45% where we got to versus 4.3 previously a week prior, but 4.43 morning session. So there is an elevation there. We keep hearing from more commentators that there are concerns about the US debt position and deficits, what we're going to see under an incoming Trump administration, which has just put a little bit of heat in that long end of the curve. The short end this morning, we're purchased shy of 4.3%. To the dollar as a result of that firmer yield story, it's been a dollar is king trade. A big question too, again, whether this does continue, but that has been the wash up from the election and morning session. The casualty, euro dollar. Again, we're 105.39, so we've pulled lower on the trade here in Europe this morning. Sterling is trying to make an attempt to gain morning trade. Dollar yen also firmer, so yen is another one that suffered against the strength of the dollar. Dollar Swissy is slightly weaker. Now, big moves in oil prices again last week on the back foot for oil, and the morning trade is just shy of 67 on WTI. Brent picking up about 0.1% and back above $71. Gold trades are higher, 0.9 firmer. So bullion trade has it this morning on the commodities. To the Asian markets, we're talking about some of the big investment houses downgrading their views on the Chinese market, but also on Hong Kong stocks as well. That was from Goldman Sachs to Morgan Stanley, just assessing again the dynamics here on the wash up from some of those property market measures, but also potential now for any trade tariffs with the United States. And morning session, it's modestly firmer for those China exposed markets. Elsewhere, we're seeing a slightly stronger trade to the downside for Japanese stocks, but to the upside for the Kospi in South Korea. 1.8% pop, Steve.
Karen, are you sure I've got to drink this green tea every day? It just leaves a bad taste in my mouth.
All those antioxidants.
I know. Karen makes me drink one cup at least of green tea every day. It's left a bad taste in my mouth, as it indeed has this Trump trade for many investors in Europe and elsewhere, but certainly not stateside. So I want to speak to Mike O'Sullivan, author and former Chief Investment Officer for Credit Suisse UK and EMEA, about Trump, basically, and then we'll move on to other stuff. Mike, really good to see you. I love getting your copy every weekend as well. I always read it as well. And I was reading your copy about Trump and the ramifications last weekend as well. And I'm just wondering, has the market got it right? As I say, bad taste for European investors, for US investors, it's been gangbusters as well. Is the market reading the Trump effect correctly?
I'd suggest, Steve, the equity market has got it slightly wrong. The bond market has probably got it right. I think Trump, when he takes office in January, I think they will try and run the economy very hot for a whole load of reasons. It's just his instinct. The deficit and indebtedness, and remember, the world has never been as indebted, are looming risks. And one way to try and resolve that is to up the level of growth. So I think we're going to see a lot of bond market volatility in the first quarter. I'm personally surprised that a whole range of equity sectors haven't reacted in a more volatile way. We just saw the beginning of that on Friday with healthcare. This is the first time, I would say, since Ronald Reagan that you're going to have as many supply side reforms in the US, albeit in a much more unpredictable, chaotic way. And that has the ability, I think, to upset a lot of industrial structure, a lot of sectors. We haven't figured out yet, I think, what Trump is going to do with tech, and he's much less instinctively and socially close to the tech sector. The other thing I'd mention, just coming back from, I was in Asia all last week, and I think that the narrative in the media and the financial media is one where the rest of the world is sort of cowering in front of Trump. And I think Europe and perhaps Asia have lost control of that narrative. And I think when we do get into a trade war scenario, both Europe and China are better prepared. And I suggest as well that China will be more aggressive in their response.
Oh, gosh, so many points, Mike. I don't know where to start. OK, I'll do one more and then Karen will come in as well. The financial sector reforms, which I think a lot of our viewers are really interested in, they're pushing on an open door. I know that greed is an extraordinarily powerful thing, but American banks, investment banks, are making record profits, or certainly have done within the last 12 months as well. They trade at a price to book, which is double, triple, quadruple in some cases of the average European price to book as well. They are making record amounts of money. Their stock prices have gone through the roof, and indeed they're trading at high levels as well. They want financial and regulatory reform. It's very, very dangerous, isn't it, to get what they want? Because that could further down the line lead to a similar situation that we've seen in various episodes in the last 25 years, couldn't it?
In certain segments, it could. I think what this Trump victory will do, it will unblock the sort of the hold up in capital market activity. So I think the sector that's going to win is private equity, maybe venture. I think you'll see a lot more IPO activity. Klarna has just filed for an IPO in the States. So that's really the first stage in this, I think. And I think for the next maybe 3 or 4 months, you continue to see the strength in financials because the markets expect better regulatory outlook. I will also have a I think the rates outlook is perhaps not going to hurt them either. I don't think rates are going to be cut much in the next 6 months, just with reference to the interview you had with Austin Goolsbee. So financials will be I think a rare area of strength. And maybe just to turn it around, it's maybe less so that the US banks are overvalued. The European ones are trading at a pittance. And I don't see there being a catalyst here for them immediately. The whole discussion around capital market union in Europe is quite frustrating because you have people at the European level pushing for it, and then it's stymied at the national level. So that really, in my view, is where the attention needs to be.
Mike, help us out a bit more with the tech comments that you were just making, because there's been a view that you've got JD Vance, who is not really happy with the amount of concentration that you've seen in big tech companies, yet then the Elon Musk story, where it seems as though he's got to the president's ear, so you would imagine tech-friendly policies. But what could go wrong from here for those big tech companies?
So, Karen, you've got a couple of people within the administration who instinctively, JD Vance is one, Brendan Carr, who's just been flagged as the head of the FCC, who I think instinctively are against the power and potentially the monopoly capacity of some of the large tech firms. So that opens up lots of different things, tougher regulation on big tech, and again, the US, in terms of regulating things like AI, social media, is far behind Europe. We may also, I think, see more talk about breaking up some of the big tech companies. And I think Musk is interesting because he really is the only large tech entrepreneur who I would say socially is close to Trump in terms of being in Trump's orbit. Trump's orbit is much more driven by people in finance and private equity.
Mike, we did hear a little bit of a snippet around media stocks to media companies and whether there'll be a forceful administration trying to revoke media licenses. You've got an incoming president here, a president-elect who has his own social media business, with Elon Musk that has a social media business as well. It would seem both have a vested interest to ensure the destruction of traditional media. So what type of approach could we see for media companies?
Yeah, this is going to be quite difficult. And I think for me, what this opens up is a sort of privatization of the state. And in the background to Trump's election, there are many people, I think, who rightly have concerns that he will bend the rule of law. So this is one of the areas we're going to see that tested as to whether he imposes his own personal needs and wishes on industries effectively for his own personal benefit. I think the media sector in general, and maybe we'll be very, very careful as to how they treat him in the first couple of months. We've kind of got a sense of that with the Washington Post's failure to endorse Kamala Harris. I think Bezos had a sense of the Trump victory. But I think it's a really important area. And we define one of the areas we define democracies by is free media, freedom of speech. So this is a big test case.
The fourth pillar, the fourth estate. Indeed it is, Mike. Yeah. Thank you very much for joining us. Mike O'Sullivan with us, author and former Chief Investment Officer for Credit Suisse UK and EMEA. Steve.
Right, coming up on the show, it's another week of key economic data and earnings, headlined, of course, by a report from AI darling Nvidia. We'll look at what to expect. Plus, the President-elect Donald Trump names more key appointees to his top team. We'll bring you the latest. And we'll also bring you the highlights from Dan's exclusive conversation with the US Energy Secretary Jennifer Granholm, with a warning for the incoming administration. That's coming up at 6:30 London time. Welcome back. Samsung Electronics shares jumped after the South Korean tech group announced a surprise $7.2 billion share buyback plan. It's the first time Samsung has done so since 2017 and comes after shares hit a 4-year low last week on disappointing profit guidance for its third quarter. Meanwhile, Nvidia's new Blackwell AI chips are reportedly encountering overheating issues that customers worry could delay the new data centers. That's according to the information, which says the chip maker has asked suppliers to change server racks designs several times to solve the issue.
It is a big week ahead, though. Sylvia joining us now with the details. Sylvia.
Good morning, Karen. Indeed, it's interesting how you're talking about Nvidia because it is one of the big events we're watching for this week. But let me start with the broader theme as we start a new trading week. Leaders of the G20 will be gathering in Rio together, bringing together the heads of state, indeed, from 19 of the world's largest economies, as well as the EU and African unions. Tomorrow, we'll get the first American retailers reporting their numbers this week, with Walmart and Lowe's first out of the gate. In the UK, however, we're going to hear from the Bank of England Governor Andrew Bailey. He'll be speaking to MPs in Parliament. On Wednesday, this week's big event, we'll get to the highlight of this quarter's earnings season, with Nvidia set to post its numbers. Analysts expect the chip giant to report yet another jump in revenue. We'll find out. On Thursday, we'll get some more results from retailers stateside, with Gap there and JD Sport on this side of the pond. Before data releases dominate on Friday, with PMIs out of France, Germany, the UK, the US, and the Eurozone, guys. So plenty to monitor throughout the week.
Sylvia, thank you very much for that. We're going to pick up on Nvidia, not just a company, it's a macro event. That's how we see it now as it reports $3 trillion company. And I think what's been incredible has been the appreciation of the stock. We saw it last year. I think the market questioned whether it could go up this year. And here we go, now another near on 200%. So is it justified? I think as we asked the question, are the gains lately justified? There are elements here that the market is looking for. The current guidance seen up about 80% on revenue growth in this quarter to 32.5 billion. The market thinks it could even beat that number, which is incredible as we talk about big tech earnings and just sort of what level of bounce you can get on the earnings. But then there's the final stretch of the year too, and the market thinks 36.6 billion could be the number, so even higher than what we get in this quarter. There's been disruptions. And don't forget, we all heard about Blackwell, the launch of it earlier this year. by its own admission, Nvidia said, look, there were issues. We had a design flaw. Thank goodness TSMC came to our rescue and helped us out with that design flaw. So the market wants to know if it truly got going on those sales in the third quarter and what that final stretch looks like with the sales. And then there's a little bit further out. If you think, well, I bought the stock, I'm not just sitting on it for the short term, I've bought it for the medium term or the long term. What comes next? There's a refresh of Blackwell next year that is anticipated. So the market will be pressing questions on that. And then there's Rubin, which comes after the Blackwell refresh as we talk about the chip cycle. So is that enough to keep this huge moat around Nvidia?
Which company has a moat, Tesla or Nvidia? I would argue that in certain areas, both, but certainly not in automobiles for Tesla. But Nvidia's got its moat at the moment. You've talked a lot about that over the last couple of years. And so whilst we've seen travails in other parts of the semiconductor sector and all kinds of companies, Intel, whatever, across the supply chain have talked about the problem in everything apart from AI chips. So you'd expect Nvidia to trade at an extraordinary valuation compared with Tesla. Actually, on the forward, well, in fact, do your own work, ladies and gentlemen. Have a look at the forward PE, the forward price earnings for 1 year out of Tesla versus Nvidia. You may well be surprised. Perhaps not so if you've listened to us two for a while. You may be surprised at which one trades at a significant premium. Well, you're not going to be surprised because I've kind of teed it up. But the point being is, oh, well, there you go. There's the valuations of the company. But I would suggest do your work on the forward PE. But the only thing I was going to say about Nvidia is it's not demanding if. It's the old laconic response, if, from the Spartans, you know, when they were being overwhelmed by other forces. If they can achieve earnings growth this year to 130, then the share price looks fine. If they can achieve it to 273 next year and 381 in 2026, which is what people think they can do as well, then that could be quite extraordinary. Did we get the music out on air then? It was quite amazing. I always had this dramatic music in my ear as I was speaking.
Like Chariots of Fire of some sort. But the point around Tesla and Nvidia, I think they're trading on different things though. I mean, you've got Nvidia trading on AI.
One's on
Tesla
a bromance.
Trading on Trump.
One's on a bromance
right.
and the other one's trading on fundamentals of AI.
Yeah. Which has got more hype and more bluster.
I think I know that, but I'm not going to say.
That's a good dinner party conversation. Which is more hype or bluster, Tesla or Nvidia?
I don't even know if it's I think we'd all agree, wouldn't we? I don't know. Anyway, who knows?
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.